Hi everyone, and welcome back to the channel. With the recent downfall of SVB and now reports that Credit Suisse is being bought out, it makes you consider if your investments are truly safe. One other place that we've been seeing headlines about is Charles Schwab, and they're saying that they could be in deep trouble. So what happens if your brokerage firm ends up going bankrupt? Are your investments safe? Well, let's get into it. As most of you probably know, anything under $250,000 is actually insured in a bank. So simply put, this is insurance through FDIC that the bank pays in order to make sure that your money stays safe if anything were to happen to them. If you make deposits into a bank and they end up being over $250,000, that means that money's not guaranteed. In SVB's situation though, the government stepped in and is actually providing all deposits for all depositors. On the other hand, stocks don't have FDIC insurance like banks do. So if you invest money and your stock ends up going down in value, you lost out on all of that money. You're not getting any of it back. But as an investor, you know and understand that. That's something you're ready to take on. But what about if the stock price of your investment didn't go down? And actually, the investment institution that you used to be able to buy this stock actually went bankrupt. Do they absorb the shares? Can they just take the money out of your portfolio? What happens to your actual physical shares? Do you get them back or do you lose all of that money? All of these thoughts might be running through your head. So let's get into what actually happens and what are the facts. So first things first, what really is a brokerage? Well, according to Investopedia, a broker is an individual or firm that acts as an intermediary between an investor and the securities exchange. So really, these brokerage firms are just middlemen in making sure that your money gets from one place to another in order to buy that stock, because unfortunately, you can't do that by yourself. Fortunately for you, this is a really good thing. And at the end of the day, it might seem like brokerage firms actually have complete control over everything. When you get on your webpage or on your app, you see all of your stocks in there, so naturally they must be holding all of them, right? Well, that's not really the case. They're using a custodian to make sure that none of that money gets placed with them, and if they go bankrupt, your money's still actually there. Well, I shouldn't say your money, but your stock's there. That way, if the stock goes up or down, it's not on them, but the actual stock is available for you to get back if something were to happen to them. Now, all of this is to say that your stock can still lose value. It doesn't mean you're going to get your stock back at a specific price. It means you're going to get your shares back. So the stock could lose value in the wake of all of this, or something could change after the brokerage firm goes bankrupt. You're not going to get any of that money back. Unfortunately, that's just part of owning shares and being in the stock market. And as Joe Biden says, that's capitalism. Some good news is that there is insurance for this, and it's called SCHD Insurance, and your brokerage firm is most likely invested into this and has been paying the premium on this to make sure they have it. One thing that is important to note though is that the max limit is $500,000. So if you have more than that, you might not be fully protected, so just be aware of that. Overall, due to these brokerage accounts having custodians to hold your shares, I don't think it's a really big deal that the max is $500,000. But if you do have over that, you should consider different options. On the other hand, if you have less than $500,000 or less than $250,000 in cash in your brokerage account, you should have nothing to worry about. And I would just continue to focus on making the best financial decisions you can with those shares. If you want to learn more about this, go to your mutual funds or ETFs investment page where you can find out way more. There's going to be a statement of additional information where it's going to give you exactly where the funds are being held. That way you can see what's going on. It's really that simple, so just look for it and check it out for yourself. Don't just take my word for it. If you're a fan of quick, matter-of-the-fact information, please consider liking the video and subscribing to the channel. If you want to learn more about an investment opportunity to earn consistent cash flow month after month, check out this video right here. Otherwise, I'll catch you in the next one.